It's about that time of day again. My name is Joseph. It's Wednesday evening, April 19th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX tonight. Crude is bearish as it tumbled lower today, but this market has likely moved too far too fast, and sellers will be weary of selling these lows, even with the possibility of testing the $50 level tomorrow. The S&P is bearish with a channel and a wedge this evening, undoubtedly being dragged lower by the price of oil this afternoon. But we have two clues in the chart telling us to stay patient for a two-legged correction to sell more tomorrow. Gold is bearish, but the sellers recently tried twice to retest the low and appear to be failing. This tells us to use that recent spike in channel coming off the lows if the bulls can take control tomorrow. Euro's bearish with a wedge this evening, telling us to look for selling opportunities up at resistance levels overhead for the reliable sell back down to the target tomorrow. And the FDAX is bearish with a strong move back to their big round number this evening. And we can assume that sellers will likely take profit at these lows and look for a better place to sell high tomorrow. We had some big moves in this Wednesday session. We had some big opportunities setting up for tomorrow's Thursday session. Before we jump into these charts, though, I do want to remind you, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. If you're watching the video on YouTube right now, it's only a small portion. Go into the description of that YouTube video, follow that link, and come join me on the blog here at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when this nightly newsletter goes live. Follow me on social. Right below the video, lower left-hand corner, many different ways to follow me on social media. Follow those social media channels for links and charts and updates throughout the day. Right below that video tonight, grab those charts right at the bottom of this video here and right below the video on the blog. You'll see a spot to download today's charts, have those charts ready on your computer for tomorrow. And please don't forget to grab your free pass. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee you that. If you're not an advanced member here at School of Trade, grab that free pass in the upper right-hand corner. And please don't forget, if you're brand new here to the SOT community, it's great to work with you here tonight. Don't forget that frequently asked questions section will answer all your frequently asked questions. Guys and gals, keep in touch. Don't forget, you can always email me feedback. My email address is jj@schooloftrade. I'm always asking for feedback, so I want to make sure, right, we make this the best place to learn and earn for you guys every evening on this nightly newsletter. All right, big day today, big day tomorrow as well. Let's jump in and get ready here. Tomorrow's April 20th, 2017. Of course, Thursday, the 20th day of the month of April. And of course, we got some major news coming from Japan tonight, 7:50, 6:45 from New Zealand, 7:50 tonight. Not expected to be too big of a market-moving event, but please be aware of that if you trade in the overnight Asian session. Really not a lot of news tomorrow morning in Europe. We go right into the U.S. session tomorrow at 8:30 a.m. Eastern time. We get jobless claims and, of course, the old Philly Fed Outlook survey tomorrow at 8:30 a.m. That's the big news tomorrow morning, 8:30 a.m. news. Watch the clock tomorrow, 8:25 for the cutoff, right? We'll be doing that tomorrow with all of our clients in the trade room. Don't forget, we open up our trade room for all the advanced members at 8 o'clock Eastern time, and we'll hope to see you guys there with me tomorrow. 8:30 a.m. news tomorrow. It's pretty much the only thing on the calendar for tomorrow, and we'll prep for Friday. Friday, get a bunch of news on Friday. We'll come back on Thursday night's newsletter, tomorrow night's newsletter, and we'll get a plan ready for Friday. In the meantime, though, don't forget, we'll see you guys tomorrow, 8 o'clock Eastern time in our trade room. Let's jump right in. We got crude, S&P, gold, euro, and we can't forget about the old FDAX. Crude is bearish as it tumbled lower today in the wake of the inventory report. The bears clearly have control, but this market has likely moved a little too far, a little too fast, and sellers will be weary of selling these lows, even with the possibility of testing that $50 a barrel tomorrow. The big clue on this chart is this rising support trend line, which will make for an excellent selling opportunity if we can use it as resistance. If price tumbles lower again, we want to avoid chasing this move lower and look for traps to keep selling down to $50 a barrel tomorrow. We always want to keep an eye also on a possible trend reversal. You know, this market really moved pretty quickly here to the downside on relatively low volume today, which definitely gives the buyers a chance here. If these sellers take a firm profit off the table here, this price definitely has potential to spend the majority of the session tomorrow morning in the green, right, in the bull zone. So we're definitely looking for a possible trend reversal. That would require a strong move higher with a successful breakout pullback for the bulls to take take control. Really right now, there are ultimately three scenarios I'm watching right now for crude oil. As you can see here, we had that strong move down. The day started off today in a very, very small range. Bulls had control, gave it. Bears took control, and of course, it just kept on bleeding lower into the afternoon session, right, as it closed up at 2:30 p.m. Eastern Time. As you can see, I have marked up a double down here. That moved down. That's pretty much all we have to work with is that double down tonight. You can definitely tell this market was definitely in the irrational zone here this afternoon. There wasn't a lot of rational trading going on. It was pretty much just a free fall here down at that double down. So you notice, right, we didn't see many tests of the moving average here after the news came out, right? It really didn't pull back very far. It pretty much just kind of collapsed on low volume. So whenever we see that, we assume we're going to see some profit taking down here. We assume that more sellers will be interested, but they're not going to want to sell this low. You know, the bear channel in the chart, this bear channel is somewhat worthless. I don't want to say worthless, but, you know, the bear channel really doesn't give us much to work with. There's a big overshoot at the low, which we then expect to have a big overshoot at the high. Oftentimes, when you see a channel like this, and we're going to see an example of this on gold here, oftentimes when you see a big overshoot at the low of a channel, that big overshoot at the high of a channel will have the market almost shift too far. Right, I mentioned this earlier. The market appears to have gone possibly a little too far, too fast, and so as it over-rotates below the low of that channel, it may snap back above the high of that channel, and the buyers may have, right, the momentum at their back, the wind at their back to take this price higher tomorrow. So really three scenarios we're watching here for tomorrow. Scenario one would be we go up and then back down, right? Scenario two would be go down and then back up. Right, and then of course scenario three would be we go up, hold, and continue. Right, we do want to continue. We do want to make sure we don't rule that out for tomorrow. By the time we come in tomorrow morning at 8 o'clock Eastern Time, we may see this a rip-roaring bull market trying to take back, you know, half of this $2.50 move that we saw late in the day today. Remember, a lot of traders don't trade after the inventory report comes out, so I'm sure a lot of traders on the golf course here in this spring afternoon rather than watching this market tumble. With that said, scenario one, really I like to use this support trend line here. One of the things we'll definitely be watching here for the bears tomorrow is can I get below that trend line and then use that trend line as an area of resistance. That's definitely going to be on our radar here for tomorrow. And of course, that would require a little bit of bullishness, right, for that price going higher here, up around that prior month close. It really depends on, right, when and where we test that trend line. So that would be one scenario here, watching for the bears to take it, right, the bulls take it a little bit higher, right, and of course the bears taking it back down. Be watching for that as well. And of course, really that trend line is really kind of public enemy number one right now for these bears. We really don't want to sell into that trend line, so really get below it. Moving average comes over, and this would be another scenario here, would be a buyer failure at the moving average, right? Anticipate now this moving average comes over. These happen quite a bit, right? Price goes up, pulls back, buyers can't hold, right? And we tumble back down. We may not get all the way up, right, to test that trend line. That would obviously be ideal, right? Test it and back down, but we may not, we may not. We may see this moving average come over, price pulls back, they can't hold it, right? And what happens, right? Price collapses back down again. So buyer failures, trap highs, again, a two-legged correction, use that trend line. Those are all scenarios we're watching here for tomorrow. Now, sticking with the downside here, we also want to think about that big round number down there at $50 a barrel. It's really difficult to be within that 50 to 51 area and not start thinking about this market returning back to that big psychological price magnet that is $50 a barrel. Heck, we just heard from some of the biggest shale manufacturers or shale producers in the U.S. this afternoon, and they said they're right on track to find a way of making money at $50 a barrel, and you know who's not going to be happy about that. So we're definitely anticipating that is on the radar for tomorrow, but we really have to be careful. So first of all, we talked about price going up, using that trend line as resistance, right? Buyer failures, trap highs, breakout pullbacks, to use that trend line, use the moving average, right, to sell back down again. if the price just collapses back down, by the time we come in, middle of London tomorrow morning, we may see this market really tumbling lower. If it does tumble lower, we have to be aware that it's going to force the hand of the sellers, but the sellers aren't going to want to sell low. What will they do? Look for that trap high, right? A two-legged correction. We'll trap high, right, to allow us to sell high tomorrow. This is a pretty easy technique, right? When you have a real strong move down, the market just keeps running lower. We have to be weary of this price kicking back into that trading range, right, or becoming a trading range here tomorrow. So we don't want to sell low. So if it does roll lower, your job now, and usually what happens is you'll usually see something like this, right? It'll be the same type of situation, right, that I described earlier, just trap high, right? Again, two-legged pullback, allowing us now, right, to sell high. If we do end up tomorrow morning rolling right over down to that $50 a barrel, watch out for a spike in range, right? Kind of roll over into a range on top of that $50 a barrel, and then again, look for it to go up, failure, and then back down. Anytime you see a trading range, you're always focusing on failures. All right, so as the market goes up, moving average comes over, right? Buyers try to buy it and reverse it. We're looking for that failure so we can sell it back down again. Pretty easy, right? Pretty easy idea there. Obviously, it's got to prove to us first, right, by running down to that big round number. The moral of the story is, though, if we do try to go lower here, two-legged correction up and then sell it back down, don't chase after it. Right, try to anticipate, right, those sellers getting stopped out, chasing after it, and try to sell high tomorrow. Obviously, we want to think about what this market looked like if it was a bull market here tomorrow. The key right now is going to be strength. And I'll tell you, a lot of times we see big, strong moves like this. The next day the next day we're literally targeting that $52 a barrel area about halfway back of that move. So we definitely may see the bulls, right, make some hay tomorrow on the way up to that 52. And we may see it return right back over tomorrow afternoon too. So, we'll have to wait and see how that goes. But what that would look like is a strong move up, moving average comes over, buyers hold, right, and what I call a successful breakout pullback, which means break higher, hold that pullback and go. Right, that would be the requirement there for the bulls to take control. So we may see that tomorrow early in London, right? Profit taking here for the bears, price jumps up, they hold the pullback, and we're off for the races. We spend the first 3 or 4 hours tomorrow in a bull market before, possibly something like this, right? Strong move up, hold the pullback, and then possibly something like a trading range, right? As the buyers run into sellers, right, who are now selling about half back, right, trying to send this price back down to that low. So we'll watch out for that tomorrow, and obviously we'll require a lower low, hold the pullback, and then we're off for the races, right, selling that market back down again. So we'll watch for that turn. So don't be surprised here if we see something like this tomorrow, right? We see the jump up, buyers have it, right? We kind of go sideways here, right, up around that half back area, and then of course, right, take off the downside and finish the job off back down to retest that low. We got 3 scenarios we're watching for tomorrow: up and back down, up and holding the pullback for the trend reversal, and of course the price collapsing down to the $50 a barrel tomorrow. Don't forget, we're going to execute this strategy tomorrow with all of our clients in the trade room. Hope to see you guys there with me. Let's keep going. S&P is bearish with a channel and a wedge this evening. Teach and trade with you guys tomorrow in our trade room. Don't forget, before I let you guys go, with all of our students tomorrow, all of our advanced members, I should say, in our trade room opening up at 8 o'clock Eastern time. Grab that free trial at schooloftrade.com. Learn more about how I trade here. You'll get the who, what, where, when, and why on that free trial, so make sure you grab that free trial before you finish up tonight. Learn more about our 3 levels of membership: our beginner, intermediate, and advanced membership. Our most popular, of course, being our advanced. And I'm always here to help out. If you have any questions, use that live support tool on the right-hand side of the website. Holler at me if you guys have any questions. If I don't see you guys tomorrow at 8 o'clock Eastern time in the trade room, We'll do same time, same place tomorrow, right? Thursday evening. We'll see you guys same time, same place tomorrow for Thursday night's newsletter. Guys, thanks for being here with me. I know there are plenty of other places you could be right now. I appreciate you spending the last 45 minutes with me here on the newsletter. I'll see you guys next time. Adios, amigos. Bye-bye.